Welcome to today's naked trend trading session. My name is Walter Peters. We're going to talk about naked trend trading today, which is a pretty good day to talk about trend trading given that we have so many interesting, trendy looking pairs at the moment. So it's pretty good day to be talking about trend trading. Now, we're going to go over 3 different methods that you can use if you want to trend trade without indicators. I'll show you the charts that I'm trading right now, and at the end of the session, we can look at some of the charts that you would like to see from a naked point of view. So that's all in store for us today. So buckle your seatbelts. Let's go. All right. So are there any pairs that you guys want to see right now? I can show you the ones that I'm trading. And I can show you the ones, in other words, we could use your pair as an example if you want, because I don't want people to think that, I'm just taking extreme examples that never occur or whatever on the charts. The two trendy markets that I've got are the trendy candle, 4-hour euro yen. This is a new MetaTrader installation, so my stuff is not quite set up yet. This was a signal right here. We're going to talk about that one first. So the first type of trend entry is a trendy big shadow. Trendy big shadow. Big shadow is a special case of the engulfing candle. We talked about that we talked about engulfing candles actually in the last webinar. So go back, have a look at the most recent webinar before this one that was posted, where we talk about engulfing candles versus big shadows and stuff like that. So you have that in the archives. So that's there. We're not going to go into the big shadow and all the nuances of that, but we will talk about how did I know, or how did I assume that the market was going to go higher after all I saw was this. All I saw was that candle. I didn't even see this candle over here to the left. So I saw this big bear bullish candle. Now, what you'll notice about this candle is this candle has the longest range from high to low in the last 6 candles. Actually, the last 5 candles. Sorry, 1, 2, 3, 4, 5. Yeah, and I think this one's got a wider range, doesn't it? Sure does. 70 pips, and this one was, sometimes you get, 62 pips or whatever. So I think it was 61.8 pips. Oh, trader joke. Okay, so what we want to do is talk about what is this? What's going on? Well, first of all, the point of view that I had was the market had been falling. Then it seemed to potentially make a V bottom. Now, when it got to this point here, there was a slight likelihood that it might pull back and make kind of like what I call a whammy bottom or a double bottom or some sort of retouch of the zone. But I said, tell you what, if it just simply flags down here or makes a weak sort of retracement move, and then I get a really clear candle that tells me, yeah, it's going to be a good trade to take. It's going to be a bullish, a nice bullish candle, then I'll go in with that one. You know what I mean? And so that's what I did. I went in when we saw this big bullish candle here. And it's the biggest candle of the last 5 candles. It completely engulfs the prior candle. In fact, it completely engulfs the prior 3 candles, which is even better. What you have to notice, what you'll notice about these trends is typically the trend goes in sort of really strong trendy candles and then retracement candles. Trendy candles and then retracement candles. And so when you see these big candles like this is a trendy candle. That's a sort of a retracement or consolidation candle. Then trendy, then consolidation, and then boom, I got this big candle which told me everything I needed to know, which is it's probably going to break through these highs here, and it's probably going to at least get up to these lows and possibly even to where my target is. So what I've got now, I've got 2 positions, and basically you'll see one position will get cashed out up here around 117.33, and another one will get cashed. Has got a trailing exit. And that trailing exit is what we call a 3-bar exit. So the last 3 bars, the lowest low. So you can see the lowest low is, well, it's under this candle right here. Actually, technically, it should be under this candle because the current candle doesn't count. The current candle doesn't count, but I actually moved it to this candle prematurely because I was doing this webinar, so I didn't really want to. But the point is, it's going to get stopped out eventually at some stage, and in the meantime, I'm hoping that the target here is going to be hit. This target's a little bit better than 2 to 1. I think it's 2.2 reward to risk ratio on that one because there's about a 50 pip risk, and I think this is a 110 pip reward, something like that. Yeah, something like that. Anyway, the point is, if my math is right, I think 2.2 is the equivalent of 50 times 2.2 is indeed 110. All right, so that's, and you'll see these all across the board. They're also bearish ones. So for example, on, well, we'll talk about that one in a moment. For example, on the CAD yen, I took a CAD yen trade yesterday as well. And you can see the exact same thing. Now this one can fit into sort of 2 different types of setups, but if you were looking at this candle alone, what you would say is this candle right here engulfs the prior candle. It's the largest candle we've seen in the last 1, 2, 3, 4, 5 candles. And it engulfs the prior 1, 2, 3, 4, 5 candles, doesn't it? It has a higher high and a lower low than all of those. So that, again, would be a re-engagement of the trend candle. It's a big shadow. It engulfs the candle on the left. And it's basically telling you that the consolidation move, the retracement move against the trend is over, and that the trend is re-engaged. Does that make sense? Is everyone following this? This idea of taking a big shadow in the midst of a trend. Really, what the key here? Let me put the key elements up here for you. The key elements are that the big shadow signals end of retrace. So while the market always goes through ebbs and flows and high tides and low tides, depending on how you want to, which analogy you want to use, but when the market's trending, well, my target might be hit during this webinar. I thought it would be hit, maybe this week. But when the big shadow prints at the end of a really weak retracement move, where you tend to see candles that alternate, candles that go, in my case, red, white, red, white, red, white, and really wicky candles that open and close right around the same spot. When you tend to see those, what that usually means to me is that that's a retracement move. Also, the retracement moves tend to go against the trend. Only in certain circumstances, when you have a really, really strong trend, will you actually see a case where the market will print a retracement, but it's horizontal. So it doesn't go against the trend, it just kind of flat lines. Let me show you an example of one of those, actually. I think it may have been the New Zealand yen. Well, I think it was more the daily, really, but let me see. Yeah, here it is. It's the New Zealand yen. So with a typical trend, what you'll see is the market will go, okay, first of all, let's identify what's what here. Well, this would be consolidation in here, I would say. Okay, so in the blue box is basically the end of the end of the trend, the consolidation. We don't really know what's happening when it's happening, but you do have some clues. The end of the trend, usually what ends up happening is you'll see a reversal of the pattern. So if you look over here, what you'll notice with the New Zealand yen was that, well, hold on, let me get this right. Sorry. What you'll notice here is that once the market kind of broke this area of support and resistance, it broke through here, couldn't get through, finally got through here, okay? Came back down, bounced off of it, and it was off to the races. Well, these little retracement spots here, that's a little retracement against the trend. And this one is too, but again, this one's more of a flat one. See. Oopsie. This one's kind of more flat, like we were saying, but typically they'll go against the trend. So if it's an uptrend, you'll see it retrace down. And then occasionally, so now we're in consolidation because what's happened is flipped. Before, the trend candles were the white candles, the big candles were the white candles, started to slow down. It apexed right here, and then you see trend candles going bearish, and now you've got retracement mode here, and then it just rocks into consolidation. You know you're in consolidation when your bullish candles and your bearish candles are about the same size. And that's what's going on here, right? You got a bearish candle here, you got a bullish candle here, it's all sideways. Finally, it gets out of that box, and actually you could probably say that the box is actually something more like this, and that was kind of a blow off top, another test of this top. But then it comes out, and now you're re-engaged in the trend. Trend, retrace, trend, retrace. And what I want to point out is that these boxes right here are flat. These horizontal retracements are flat. What that means is you don't have the anti-trend move. Typically, when you have a trend, CAD yen, Montreal Mike. G'day, Montreal Mike. Is that Montreal Mike? You are up late, buddy, or early, however you want to look at it. So there you go. Boom. All right. So these are two different styles of retracement. So we've all seen them in the trend. So again, so we've got another one right here currently. Okay. Okay. So what I showed you before on my CAD yen trade and my Euro yen trade was what you would call like a I don't know. I guess you would call it a like a standard sort of retracement where the market's typically it's taking out the target. Okay, well there you go. Target hit on the Euro yen. Awesome. What's the CAD yen doing? Yeah. So see how this is slightly going up, but the candles are really wicky, and they look nothing like these three trendy candles, which are massive. Closes down near the low, at least on these last two candles. These candles, the closes around the middle. They're very small-bodied candles, and it's slightly going up, and it's slightly going against the trend. Sometimes you'll get a steeper move. My preference for trend trading is to find like this kind of a trend where it's slightly going against you or just flatlining. You can see we're in another one right now, right? When it breaks this trend line, it'll re-engage with a candle or two that are trendy. So let's go back to the New Zealand yen. All right. Signal seems bad on my end. There's no video feed. Can everyone see my screen? Yeah, I think it's fine. Should be fine, Mike. I think it's all good, guys. Yeah. It's not showing me any errors, so I think it's good. Yeah. It's all good. Okay, so it's fine. Okay, so it must be on your end, Mike. All right, so let's talk about this. Number one entry, big shadow at the end of a retracement. Big shadow is an engulfing candle. It's the largest candle in the last 6, 10 candles, however far you want to go back. It's got a higher high, a lower low, and it closes down near the low for a bearish big shadow, for a bearish trend re-engagement, and closes near the high for a bullish trend re-engagement. Everyone clear on that? You will sometimes get trend retracements that are against the trend like this, like where I've drawn these pink little trend line things that contain the retracements on this downtrend. But a lot of times, my favorite trends are like this, where it just flat lines and then it falls. Flat lines and then it falls. You know what I mean? Those are like the best, really. So you can see this webinar on YouTube, guys. So there you go. So that is essentially essentially the first method. Any questions about the first method? Does that make sense? Everyone cool with that? So that's naked trading trend re-engagement signal 1. Cool. Cool. All right, I know there's a bit of a delay. All right, let's move on to the next one. For my next trick, okay, the next one I want to share with you is, let's see if we can find one. Maybe. It's not a good chart. That is not a good chart. What you will, no, that's a pretty good chart. Actually, no, this is a good chart. Let's take a look at this on the 1 hour. Actually, this one's not as clean as I would like, so I'm not going to use this as an example. It's just not, it's not clean enough. We did have one, I think, on the Euro Aussie. Where is my Euro Aussie? Okay, here's one. Here's my second favorite trend pattern. So the first one I've already shared with you, and obviously I've got a few trades on that, so I like that one. Currently in a few trades on that. Now here's another one. Now this one's a little bit tricky because people get faked out on this, and to be fair, you have to be careful to make sure that it's going in your favor, like that it's going the direction you expect. Now typically what I like to see with this is a trend like this. The market's going strong in one direction, which it clearly is on the Euro Aussie, and then it starts to consolidate. And it consolidates in a very specific way, which is to say that we've got a very nice level of support and resistance, in this case, 1.4293, all right? That's my, now, if you drew this at 99 or at 1.43 even, would that be bad? No, not at all. That would be fine, right? If you drew it at 1.4299 or whatever. Or if you wanted to say 1.43, I'm going to use the big number. Fine, okay. If that's important to you, go for it. So now what we have here is an instance where the trend line, okay, is pushing the market and squeezing it and forcing it into this area of resistance. And the market keeps getting tighter and tighter. These are some of my favorite trades. And to be honest, they've been my favorite trades for probably 14 years. Going back 14 years, I used to trade these, and I just love them. I don't know what it is. They just kind of resonate with me. So when you see a really cool looking setup like this, where it's, you know, bouncing, what you really want to see is you want to see it repeatedly hit that. It doesn't matter if it's a bullish setup like this, where you have a bullish trend and then followed by, you know, a bullish trend line that's capturing the lows, or a bearish trend with a bearish trend line that's capturing the highs and pushing it up against resistance. I mean support, sorry. But either way, you want to see several touches. Now this is important. There should be a rhythm to it where the market hits these levels repeatedly. So 1, 2, good day, Kareem. Good to see you. 3, like this. Boom. And then here we have 4 and 5, really. So again, one of my principles, and I don't know if you guys have noticed this, don't take my word for it, go do your own testing. One of my principles is repeated touches in quick succession equals breakout. Repeated touches in quick succession equals breakout. So the fact that we have touch, 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 touch. These repeated touches in quick succession equals breakout. If the market hits it and then goes away for a long time and then hits it again, that's not necessarily going to be a breakout. Because we have so many touches, especially touches 2, 3, 4, and 5 in quick succession, and the floor keeps being pulled up by this trend line, that's a good sign that we're going to see a breakout. Does everyone follow me so far? Is that making sense? So now what you want to do is you want to re-engage with the trend. And the way that I love to do this, I'm going to get rid of all these numbers. There's 2 ways to do it. There's the aggressive way for the guy that doesn't want to miss out on the trade and just has to get in a trade. So this is the trader who doesn't mind having a lower win rate because he wants to get in every trade. Okay, he just can't stand missing out. So in this case, what you would do is you would put your buy order immediately above the trend line here. I'm sorry, the horizontal level. So I might put a buy, for example, I might put a buy order in this case at 43.05. I always use blue for my buy order, so I'll just put buy order 43.05. So it's 5 pips higher than the zone here, and basically when it hits that, I mean, to be fair, it's probably 8 pips higher than the zone, but whatever. When it hits that, I will have considered it to have broken out. Now, what's the problem with that? If I use a standing buy stop above this windsock formation, what's wrong with that? Where might I go wrong? Any ideas? Where might I completely lose the plot if I get a buy order at 43.05, if I put that in? Yeah, of course, yes. The answer, of course, is that if I do that, if I put my buy order in at 43.05, it could spike and have like a blow off top, trigger my trade, and then I get blasted. Now, I like to put my stop loss low. That would be a stop loss down here at 1.42, 57 or so. 1.4257. So I've got a stop loss at 1.4257. I got a buy order at 43.05. So it's about 48 pips risk on that one. And let me show you what happens when you get these. Well, I don't know if we'll be able to see it because it's so long ago. But sometimes what happens is, I'll show you if the chart goes back far enough. I don't even know if this chart's going to go back far enough. See? No, it doesn't. Okay, forget it. I was going to show you a trade that I took on one of these setups, but I was so keen by putting my order in right there, I got triggered. I made like 10 pips I was in 10 pips of profit, and then it reversed, and it reversed for like 3 months. So, and I got stopped out and everything. It wasn't, I didn't hold on to it or anything crazy like that. When the euro made a high at, I think it was 119.13 back in 2003, I believe. But these charts don't go back far enough. But the point is, if you're looking to get into these trades and you don't want to get really aggressive with it, you can just wait for it to bounce off here. Because typically, if it's a true breakout, it will break out. You'll see several candles close up here. It'll retrace back down here, and it'll bounce off your 42.97 zone with a nice big bullish candle. And that's your trigger. You can use that candle also to place your stop, or you can still place your stop below the nearest swing low, which in this case happens to be here. There might be another one. If this keeps tightening up, you might have even a higher swing low, so you can have an even higher or tighter stop. But waiting for that retracement and bounce off this level where it confirms the breakout is really the safest way to trade this. Because sometimes what you'll see, there's 2 common patterns. One is you'll get a big bullish candle that it breaks out, and then immediately after you get a bearish big shadow that covers it up, and then it's a failed breakout. And you know it's a failed breakout because within 3 candles, it's back down below the zone. Okay? And you can fade those. In other words, you could sell that. and put your stop loss up above the swing high and use that as a trade itself. The trade end of the trend signal. Those are awesome. Okay. Reason why end of the trend traders love it so much is because the market moves so fast, and that's a great example of how to pick sort of the. It will sometimes happen, but more likely it'll blast off up here. It'll spend 3. Low, which in this case happens to be this swing low. But again, like I said, if this keeps tightening up longer, we might have a different swing low later that's at a different price. Cool. Any questions on that? Is that making sense, guys? So you have 2 trend trading entries. One is the trendy big shadow, and the other is the bounce and stop loss below swing low. Stop loss. Retest it and then moves away from it really quickly. Okay? Cool. You have a trendy big shadow. To re-engage the trend, you have a squeeze play. All right. The next one that I want to share with you is basically it's a trend. With a trend drop, what happens is the market's following a trend line in a retracement, and it finally drops below that that retracement. So with the current see how we've got alternating candles in a row, but it goes red, white, red, white, white, red, white. That's a classic of a simple retracement. They're not impressive in any way, and they're just pretty weak. They're just kind of shallow, not a very steep trend line at all. That's typical of a retracement during a bearish trend. It looks a lot like that. So how might you take advantage of this? Well, you can just simply wait for the market to $76.06. So if this trend line is trending higher, it's at 76 right now today. It's at 76.16. So if a candle were to break below 76.06, let's say it trades at 75.99 below today's low so far, which of course is the low was made during the Asian session so far today, and it would trade below yesterday's low. But not only that, more importantly, it would trade below the trend line. So that's one aggressive entry. These are again retracement. This is just a trend drop. It's a simple trend drop. And all I'm waiting for is for the market to get below this trend line. And again, what I've basically done is I've drawn this arbitrary line in the sand at 75.99, which is right there. And I say, if the market gets to that point, I've considered the trend line broken. Okay? So that entry, that's for the guy who want to miss out, or the girl who doesn't want to miss out on the trade. Sell stop. And on a sell stop below the trend line. That's one entry. Now the stop loss is going to go above the high of that candle happens to be 76.75. But if this candle doesn't break below the trend line and tomorrow it keeps going, marching higher, then we'd have to use tomorrow's candle. But right now, the highest high here happens to be today. It could have been this candle over here, and maybe we would have had our stop loss place there if today had a lower low. You know what I or lower high. Enter is to enter on a close below the trend line. This is safer, but you have wider stops. Obviously, self-stop below trend line, it could bounce and come back up. It might have been making just like a wick, like it did here, you know. And what's the low on this one? 75.86. Yeah. So maybe it was making a wick, and so then you're like, oh, that sucks, and maybe you're going to get stopped out. But if you wait for the market to close below it, like this candle over here, this is a great example. It closed below on this candle, so that's you're much safer. You see, some people might have gotten traded this one when it broke this trend line, so they would have maybe entered around here, around 79.24, but you wait for the close, so you get in at 79.15, right? So it's 9 pips lower. Sometimes it's even further than that. Sometimes that happens where it trades all the way down here, and you lose out on 10 or 20 pips. And you have to deal with that. So are there any questions about the trend drop? It's a very simple idea. Again, you're just using that trend line to contain the retracement. The market, if the market breaks that trend line, it's over. Is everyone's connection okay? Is everyone good? Everyone fine? Viprala, you can just email me, okay? If you have questions about stuff like that. This is probably not the best place. Just email me. I put my email on that chart. Any questions about the trend drop, the squeeze play, or the trendy big shadow? Any questions about any of that stuff? Yeah, so I think the only person is Mike. Mike's the only one that seems to have a connection that's cutting in and out, I believe. Viprala, is everyone else okay? Is your connection good? I think it's fine. Okay, let's move to the live charts, guys. YouTube keeps dropping. Oh, okay. Gotcha. Can you guys send me a chart that you would like to see, and we will start going over the charts. I think I mentioned I'm in the Euro-Yen trade and the CAD-Yen trade. Both of them are trendy continuation trades, so kind of makes sense. We've been talking about that today. So the Euro-Yen and the CAD-Yen. So the CAD-Yen here was basically a trend drop. I took the CAD-Yen on a trend drop. So I waited for it to break below here. I put my line in the sand at 80.94. So you can see 80.94 is right here. I said if it gets to 80.94, then I will consider it have broken this trend line on the 4-hour CAD-Yen. So it did that yesterday, and I'm in the trade now. Okay. The other one is the Euro-Yen. That was a bullish big shadow, a trendy big shadow right here, signified with the arrow. And I've got one on the trailing exit, one position on trailing exit now, and I got the other one that just cashed out actually during this webinar. So that's pretty fun. That was a 2.2 reward risk ratio on that one. And the reason why I chose that level as a target, I should have mentioned this, is because it kind of lines up nicely with this support level here. I thought that the market would have some trouble getting through that. So that's why I use that as a target. Okay. Pound yen. It's all aboard the Orient. Okay, where is the pound yen? I can't believe I don't have the pound yen on here. Oh, there it is. I have all these charts on here, not the pound yen. That's sacrilege. Okay, so, and then we'll look at the yen after. All right. So to me, the pound yen's in a really interesting spot. I think going back, you can see here, there are a lot of areas here where it's like, oh, this is resistance town. This is definitely resistance town because it used to be support town over here. Support town, resistance town, support town, support town, support town, support town. So now it's resistance town. And in fact, one of my favorite trades, it would have been, let me see if I didn't take it, but let me see if it's, well, it would have been good for a few pips. One of my favorite trades would have been off this candle right here, this bearish candle. And that would have been good for 80 pips. Not much, really, just down to this local low. Then it rammed right back up. Pound yen's been really weird the last month and a half, but I think it's reawakening, which is kind of cool. So I would look for shorts here. If the market starts to tighten up like we were talking about and make a squeeze play, then you look for a breakout. So there's two kind of competing theories. One is that it's going to double top here and fall off. So you would count this as top one, touch one. It's come back down, and this is going to be touch two, and then it's going to fall away. The other one is that this trend line here contains the price action, and it gets tighter and tighter as it gets up here, and then it's going to pop and go higher. So that's the pound yen. As far as the yen, I think the yen is in a downtrend. I think it may be in kind of like this retracement thing now. And there's two spots that are interesting. They're really close to each other. Two important spots to me. One is at 110.30 and one is at 111.80. If the yen retraces up to 111 or 110.30 or 111.80 and gives me a bearish candle, I would like to sell the yen there or sell the yen here. Again, it's got to get up. It's got to do two things. It's got to get up to that level. It's got to touch it and print a bearish candle and move away from that bearish candle quickly. If it goes up there and kind of sits there with a bunch of neutral looking candles, that's a breakout pattern, right? So let me show you, because we had this on, I believe, the pound kiwi and the euro kiwi earlier this week, where I was looking at for potential bounces, and it was actually more of a actually, it was right here. Here, I'll show you. So, okay. So see what happened here. Let me show you. Actually, I think we had a webinar during this, right? We were talking about it was a bullish pattern, and then this wild candle printed right here, and it was a bullish breakout. Yeah, in the last webinar we were talking about this. Look at the engulfing candles webinar. We were talking about this pattern actually. So see how the market went up here and it touched it? Well, if it had touched it here and then moved away with a nice big bearish candle, that would have been a nice trade. But typically when you get a big bullish candle followed by a little tiny candle at the top of that bullish candle, that's a trend continuation pattern, typically. Now, if this had been a long-tailed candle or something like that, then maybe not. But the fact that it hit it, pulled away, and then hit it again within 3 candles. So 2 out of 3 candles hits the zone. That's not a good sign. And then the euro kiwi had a similar thing right here. Oh, I didn't put my template on here. Again, this is my new, I just installed this MetaTrade on here, so it's kind of, yeah, here's the other one on the euro. Okay, let me show you this one. This one's interesting too, because see how it did this? The reason why I'm talking about all this stuff is because when the yen gets up there, we have to pay attention to what it does, okay? If the yen gets up there, it prints a candle like that and then a bearish candle, and then you go, okay, well, I'll sell it, okay? I'll sell it if it gets below this bearish candle and confirms that it wants to go lower. Okay, so you put your sell order right there, right? Okay, so that's one way to do it. Now, I would not consider this little tiny candle a bearish candle. I would consider it a neutral candle. I would want to see something more like this, or this, or this as a bearish candle. Or that, you know, a candle like these little ones, those are neutral, really. But let's just say, for the sake of argument, that that's what I was thinking. Well, then what does it do? The very next candle runs up and rams right into that zone again. 3 candles touching the zone. The odds are now starting to turn that it's more likely that the market's going to go higher than lower. And then we get another candle that, again, 4 candles in a row rams right up against that zone, that's resistance zone, and then it breaks out and goes higher. So that's what we have to pay attention to. Really, you can tell when it's a good bounce when it touches the zone, and then immediately you get a bearish or bullish candle to push off it. Here's again the same thing where you get a bullish candle, a little candle up at the top of that bullish candle, and then the next candle sits there, the next candle sits there, finally it breaks through. Again, the difference between a touch and a bounce is that the line chart will show when the line chart is showing kind of like a really kind of flat line, that means it's probably going to break out. And when the line chart shows a really sharp bounce like this, that means it's probably going to bounce off of it. Because what that means is you have a close that's come all the way up here. And I'll show you here on the candle. See what happened here? Big bearish candle tests the level. The next candle goes woof and comes right back, turns into, on the line chart, is a really sharp angle. And that's a pretty good clue that it's going to go higher. And it clearly did here. Is that making sense, guys? Is everyone cool with that? Any other charts you want to see? The reason why I went into that long-winded explanation is because when the yen there, I am going to be paying attention to what it does. That's the most important thing. When the yen gets up there, is it going to spend 3 or 4 candles, just kind of neutral candles, just sitting on the zone? Or is it going to ram into it and then immediately print a big bearish candle, and then I can put a sell order below the low of that bearish candle? And then it triggers my order on the next day. That's like ideal. Yep, cool. All good. All right, sweet. Thanks so much. No, it's not oil. It's not gold either. Okay, well, actually, let's talk about gold, because I don't know how many of you trade gold, but one thing that I want to bring up here is that sometimes it becomes a little bit tricky whether or not, when you're looking at the chart, it's really in a retracement mode, or if it's in a end of the trend. Okay, and I think that gold kind of fits that question right now, because if you look at it, it was kind of sideways, and then it went down, and then it went up, retraced, up, and now it's retracing. So the question becomes, when does this turn from just like a normal sort of counter trend retracement into the trend is over? And the answer is going to be, as usual, the answer is going to be in the candles. If the candles that are going down, you see are red, then it's probably in a sideways chop, or it's turned around, it's going to go down. More likely it's a sideways chop. It very rarely will go uptrend, downtrend, uptrend, downtrend. It usually never transitions like that. Usually the market will transition into a sideways chop first. But so what we've got here, it looks like it's an uptrend. It's pulling back, and it's going to go up again, right? On the gold USD daily chart. But all bets are off if you get a big red candle like that. Like if you see a big red candle like this, like let's say today's candle prints this big red candle and it falls back down here. Well, then now it's gone into sideways chop mode, immediately. But if it keeps printing, like today ends up as an up day, okay, and it touches this trend line once again with the wick of today, the high of today, that would be a sign that maybe we are just retracing here, and you could wait for a breakout above that trend line. So you might put an order, up here at 1290.30 or something like that. All right, I want to talk about some more charts, guys, because you got some more questions. Trader Shmi, hello from Vienna. Oh, Vienna is awesome. Going over there this summer, actually, a couple of months. I love your book. That's awesome. Pound Aussie. Okay. Jan wants to know about the yen. Okay, so the yen, I just mentioned, it's not a sell for me yet, but I'm looking for it to get, and it would be probably more of a daily chart trade than a 4-hour trade for me. I would wait for it to get to 110.34 or 110.81 and print a big bearish candle, and then I would sell. The pound Aussie. Let's take a look. What are you looking at on the pound Aussie? Like just what's going on? Yeah, okay. Yeah, so this is a trend. The only thing I would say about this chart is you have to be aware of parabolic trends. So sometimes what happens is we get these trends where, you get kind of like a trend line like this, and then the market goes a little bit steeper, starts going like this, and then the market ends up starting to go like this, like that. And right when you see these really strong angled trend lines, like if it bounces off this and goes higher, then we're in a parabolic uptrend, and those usually collapse pretty quickly. So I would be really careful with any of these pound pairs, especially the pound Aussie of all of them, because this looks like it's a retracement, but because it's gone so hard so fast, it really needs to rest here, and it has. It rested yesterday, right? It really needs to rest before it gears up and goes again. So I would not be so keen to buy it. I would be looking for a potential sell, because look, we're really close to resistance up here. So I know it's looking really bullish. The story is going to be told when it gets to 1.7160. What does it do there? Does it sit there and hold tight for a few candles? Because that means it's probably going to break it. Or does it hit there, hit it with a candle, the next candle is a big bearish candle, and then start to fall away from it? My guess is that it's probably going to hit there and then fall away from it. But we'll see. We'll see. Does that make sense? Yeah. Sweet. Hope that helps, Viprala. Hope that helps you. Thanks, Jan, and thank you, Shmi, Bolek, Montreal Mike. Thanks, guys. Have a wonderful trading week. I appreciate your time here at the Naked Trading webinar. We'll see you next time. Have a great week. Take care, guys.